Hello, everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iagino. First off, thank you to all the new subscribers, people who've rung the bell, people are leaving comments and liking or disliking videos, and thanks to all the long-time subscribers, including the ones, and especially the ones, that do a donation through Buy Me a Cup of Coffee or Patreon, and support the channel in many ways. Again, thank you so much. Interesting comment, and again, thank you so much for the comments yesterday saying I'm really talking about my bias, and I responded, what do you think my bias is? And they said I had a bearish bias. I'm going to address it. I think it's actually, if I'm anything, it's a conservative bias. It's a bias towards risk, especially with Tesla. And why do I say that? Because I've learned in many years of trading and investing since 1992, which we're going on 30 years, if you manage the risk, rewards take care of themselves. And I consider Tesla a high risk stock. So sometimes it might come across like I'm going cautious approach, or stressing the downside aspects, because I see too many channels out there. Then this is true with a lot of these stock channels, that everything's to the moon, everything, and sometimes I might have to do some clickbait too with the uranium video yesterday, but I don't stress things just to going up. Oh, it's going to all-time highs, $3,000 a share, I've talked about this before. Fundamentally, I don't see a bullish case for it having this kind of even with growth with this kind of price. Okay, so that's just fundamental. It's just like if I see a pattern on the charts, whether it's bullish or bearish, I know the probabilities, and with fundamentally, the probabilities for the long term favor a correction and do not favor this lofty valuation. And there's lots of games being played with gamma in this stock. And also, I think Elon is a risk factor. His things he does business-wise are questionable. He could get in big trouble with the TSLA, with the FTC, with his 5 years or however long it's been selling full self-driving. There's lots of risks. His personality is risky. He just got a slap. He got a couple years ago, slap on the hand for taking it private with the SEC, and they go taunt stuff. So the risk is with Tesla to the downside to me. So if I don't bring that up, and that's why I also just analyze both sides of the market, because I need to be prepared. Especially with this stock, we didn't have as much option gamma today. I think they're just glancing over 57,000 at the 810s, 53, close to 54,000 at the 820s, and then it tapers off. So it was nothing like yesterday, but again, we're getting this selling pressure, and these up moves seem very forced. I've watched stock moves and index moves and futures moves for many years, and this is getting very tired, even with all this gamma juice. So I get very cautious, because when I've seen this before in a lot of stocks, there tends to be a sudden and possibly rapid event or situation that can cause it to drop. Now, as I said yesterday, the trend is your friend until it's not. So I keep watching the bottom of the daily rotation zone, which is now right at key critical support. So that's my next key level now. To get very cautious, the downside is a close below 775. However, we would get there. What else do I have? So that's my major thing. Other than that, rotation zone's still in its favor. You got to keep trading. It looks like we could possibly still have a major significant divergence. Again, running out of momentum, even with all this gamma juice. So what happened today? What happened today? Well, it didn't do much all day long. I mean, did not do much. It's pretty much held, just below this key harmonic level. Or is that the key level I put on? No, that's the key level I put on yesterday. So that's the area it held, and I was watching this prior area we had the price projections from. Let me jump around here again. The price projections were from this high back on October 4th. So that was also the key support. You see how it's riding just above that line. It's tried to poke up. We had 814.86. You know, we jumped up there, thought we might be getting something going on this breakout, and then slammed back down. There's still selling pressure on these rallies. And there's stock being sold up here constantly. Plus, you know, there's stuff that the NHTSA is possibly not happy and pressuring Tesla more and more. I was reading a letter about that became public. So I just have to manage the risks to the downside because, look, we have our upside targets. And the reason I put out short and long-term levels are not only to help people, especially it's to help people learn how to do these projections, and I wouldn't be doing these projections if they did not prove to be valuable. Like this, again, great way if you're bullish to raise a stop. And then, you know, the next cluster we have up here around 818 is a great place to either take some off the table or, again, raise your stop, depending on how you trade or how you invest. It then locks in. If we get a big reversal, you can get stopped out, but it's locked in something. So that's what I mean. The bullish case takes care of itself. What do we have above 818? Well, we already have our next levels. This can go in a trading plan. 829, 839.50. Those could be, you could even write, you know, trading rules and bots or automated strategies around that. Look, we hit 818, move my stop, or we hit 818, sell this percentage of shares. We dip back, you know, to the key support, this 797.50 area to 800. Oops, sorry about that. 797.50 to 800. You know, we're going to re-add some shares in as long as that holds. We get below, I'm just giving hypotheticals here because, again, I can't give trading advice. We get below 775 area on a closing basis. We lighten up this much of our position and look then to add at a lower area. So if we don't analyze both the upward areas and the downward areas, we cannot come up with a either intraday or longer term or swing trading, whatever your time frame is, trading plan. And that's one of the things I'm trying to help people with is going into analysis. You got to look at both the reward and the risk, or if you're bearish and you short this or any other stock, it could be the reward going down, the risk going up. But either way you have it, you need to have a plan to take care of that. So if you're wanting to know my real bias, from a bias, it would be to manage risk and always make sure that I'm taking risk into account because rewards take care of themselves. Now, from trading, you know, if I see a double top, does that mean I'm biased to the bearish side? No, it means that there's an actionable signal to the downside. If I see a double bottom, there's an actionable signal to the upside. Does that mean I'm bullish? No, it means there's an actionable signal because it's overvalued in my mind. Fundamentally, does that mean I'm necessarily bearish tomorrow? No. Look, it's been overvalued for years in my mind, but you got to trade with the technical trend, which is where a lot of bears get into trouble. Oh, it's overvalued. Well, it was overvalued at 400, and it's overvalued at 600. It's overvalued at 800, but the trend's been up. Now, when there are warning signs like divergences, like all the selling pressure, even with this like forced up move, it seems like it's trying to carry weights upstairs, like not just ankle weights, but midsection weights, like carrying dumbbells and everything else, and maybe with cement shoes, trying to get up the stairs. That doesn't mean it can't keep. A strong person can keep going up those stairs. However, I'm just being very cautious. So, to the upside, above today's high, 818. Above there, 829, plus do the intraday projections. So, update these intraday projections that are on here now. To the downside, again, with this little pop, with that little pop that ran us up to that 814.86 level, what was the exact high? I forgot, 815.39. You can see the back down below the key level sitting right here. You also do this where's my, all right, there we go. I just want to make sure I didn't have anything wrong. So back to that 1 hour chart, sorry. Just want to double check things. So right now, tomorrow, my first area of support is about 809.25, 809. I just go 809. You start getting below 809. 1 hour support is coming in about 804. 804, and then the 4 hour support is back at 800. So my major, on any pullback, my major support area is starting at 800. Then I'll get really watching for reversals between about 796 and 797.50. If we did drop below that, I'm at 792 before we got to the daily or the 4 hour rotation zone at 790. The key daily is about 795. So this is one of the ways that's in front of that 4 hour bottom. So I'd really, again, then focus on that and coming back with the major support zone, 796 to 797.50. Other than that, that's really about it. All my other levels stay the same. The major support on the daily is now at 775, and that's a critical level. You now have this nice little significant level, support shelf, and the bottom of the rotation channel. So that's now the key area I'd be watching for a close. So if we have a disaster, or we have a huge gap, or we have a series of bars down that then close right now below 775.30 area, that shifts me into a shorter term bearish to watch for the bigger pullback. Until that happens, it's trade with the trend. The trend's with your friend until it ends, and I'll talk to everyone later. Bye for now.